Welcome to Herron Todd White's Economic and Property Market Update for August. Headwinds for Australia's residential property market continued over the past month, with value declines broadening, buyer demand weakening, and more properties coming to the market. With housing, Australia's largest single asset class by value, this slowdown is also likely to weigh on the broader economy. Economic growth has slowed, and the Reserve Bank expects that to continue over the coming quarters. The labour market remains relatively tight, but unemployment is higher than a year ago. Underemployment is rising, and job vacancies are trending lower. Inflation also remains elevated. The Reserve Bank doesn't expect inflation to return to its 2 to 3% target range until late 2027, or reach the 2.5% midpoint until the first half of 2028. With inflation remaining above target, another interest rate increase remains a possibility. Housing supply remains another major challenge. Dwelling approvals, commencements, and completions remain well below target. While construction costs are rising, interest rates remain elevated, and competition for trades continues to constrain new supply. Mortgage demand is slowing as well. June quarter data showed both new lending and refinancing falling sharply. Investor lending recorded a particularly large decline, while fewer first home buyers were taking out loans. Interestingly, those first home buyers who were purchasing are borrowing more, with their average loan size up 10% over the past year. Australia's housing market has weakened further, according to Cotality. National dwelling values fell 0.7% in July and were 1.9% lower over the 3 months to July, the largest monthly and quarterly declines since December 2022. The slowdown was already happening before the federal budget, particularly in Sydney and Melbourne, but the recent tax changes affecting investment property have exacerbated the slowdown and reduced buyer demand overall. Over the past 3 months, values have fallen across most capital city markets, with Adelaide, Hobart and Darwin the exceptions. Houses and higher value properties are generally experiencing greater weakness, while more affordable properties remain comparatively resilient. Activity has also fallen sharply. National sales volumes over the 3 months to July were 15.6% lower than a year ago, while capital city sales were down 21.2%. Sydney, Melbourne, Brisbane, Perth and regional Western Australia have all recorded annual declines in sales of more than 20%. At the same time, the amount of property available for sale is rising. Almost 73,000 new properties were listed nationally in July, while total listings reached almost 279,000, 22.8% higher than a year ago, and their highest level since 2020. With fewer buyers and more competing properties for their attention, homes are taking longer to sell. The median time on market has increased to 44 days from 27 days a year ago, while the typical vendor discount has widened to 4%, its largest level since May 2023. Rental markets remain comparatively resilient. National rents increased 5.9% over the past year, while gross rental yields are currently 3.7% nationally and have been trending higher throughout 2026. As always, national data only tells part of the story. That's why Herron Todd White's Month in Review provides valuable, up-to-the-minute intelligence from our national network of valuation professionals who are inspecting properties and speaking with buyers, vendors and agents every day. Looking ahead, spring will be the key test for the housing market. We expect more stock to come to the market, and with buyer demand subdued and sales volumes already lower, rising listings are likely to place further downward pressure on values. We'll continue to keep you informed each month with the latest insights from Australia's property markets. Thank you for watching, and we'll see you again next month.